Our next speaker is Duncan Gibbs, Managing Director and CEO of Gold Road Resources. Duncan has 37 years mining industry experience. Prior to joining Gold Road, he held senior positions with Anglo Gold Ashanti, Acacia and Shell Billiton. He led the exploration, discovery and development of the 10 million ounce Tropicana Gold Project and was the project's inaugural GM. Duncan also served as GM at Sunrise Dam, one of the largest underground gold mines in Australia. Finally, Duncan has overseen the agreed acquisition transaction with Goldfields announced in May of this year, which we look forward to hearing more about, and most likely, I guess, Gold Road's swan song at Diggers. Thank you, Duncan.
Thank you, Duncan, and thank you to Diggers and Dealers, as you say, for the opportunity to present today, and also in almost what is almost certainly our final appearance at Diggers and Dealers as Gold Road. So I'll start with, of course, the main theme, which is really around the Goldfields transaction or the scheme of arrangement that we've entered into. So, just by a bit of overview, on the 4th of May, we entered a binding scheme of arrangement or a scheme implementation deed with our JV partner at Gruyere, Goldfields, under which Goldfields has agreed to acquire 100% of Gold Road by way of a scheme of arrangement. On the 5th of May, the date that the scheme was announced, the offer from Goldfields valued Gold Road at $3.7 billion or $3.40 per share. And at the date of the announcement, the proposed acquisition represented a 43% premium to the share price prior to the Goldfields approach, and is 12% higher than the initial proposal from Goldfields. In line with details on this slide and other slides in the presentation, the implied offer price and premium will continue to move in unison with the Northern Star share price. The Gold Road board has unanimously recommended that shareholders vote in favour of the scheme in the absence of a superior proposal and subject to the independent expert continuing to conclude that the scheme is in the best interest of Gold Road shareholders. Importantly, Gold Road intends to declare a fully franked dividend should the scheme become effective, and the final amount of the dividend will be determined by the franking credit account balance at the relevant time. And based on the franking credit account balance at the time the scheme was announced, the dividend would have equated to 35 cents per share. Gold Road, of course, continues to develop or generate franking credits from the positive cash flows from Gruyere, and that will continue up until the time of the scheme becoming effective, which provides a further upside to the size of that dividend. The payment of a portion of the fixed cash component of $2.52 by way of a fully franked dividend provides additional value in the hands of many Australian resident shareholders from a tax perspective. So just to sort of touch on where we are with the scheme, the key dates, as I've indicated, is the project is, or the scheme has been done through a scheme of arrangement. And for those of you not familiar with that process, it's quite an intensive process where Gold Road basically prepares all the key documents, the scheme booklet, manages the process through the key milestones as illustrated on this slide. That includes basically the scheme document drafting and commissioning the key independent expert and technical expert reviews. We're very well advanced in completing that work, including the relevant regulatory reviews, and there are a number of conditions to the scheme, which of course included Goldfields obtaining further approval, and as announced to the ASX, Goldfields have obtained that further approval, so that condition is now satisfied. I anticipate we will provide some further details on the scheme process in the next couple of weeks. However, in summary, the scheme is progressing in line with the schedule announced within the scheme implementation deed. And I guess to give you a bit of colour, we anticipate the first court hearing will be held in about mid-August, after which the scheme booklet will be distributed to shareholders. That will then lead to the scheme meeting and, of course, the second court hearing, likely to be in late September, after which the scheme becomes effective or effectively legally binding. Because the scheme includes the payment of that fully franked dividend that I spoke to, it does mean there's a little bit of a lengthy process at the back end, but that is quite tax favourable to at least Aussie shareholders. And then we anticipate the implementation date, which effectively when control of the company transfers to Goldfields and Gold Road is to be delisted, will occur around about the middle of October. So, I mean, we can just touch on the share price performance of Gold Road, since the offer became public back in March, illustrating as well on the right here that the relative price performance and valuation ratios, if the transaction were to have concluded, of course, back on the 1st of August. And as I've just indicated, we've got a bit of time to go, so it depends on how the market kind of transacts over the next month or two. So the Gold Road share price, of course, is tracking closely in a very small discount to the implied offer price made by Goldfields, with the market really signalling an expectation that the transaction will close under the agreed terms. While the consideration offered by Goldfields is cash, the variable pricing component of the offer arises from the Northern Star shares held by Gold Road, and of course that shareholding arose from Gold Road's initial investment in De Grey and of course the more recent acquisition of De Grey by Northern Star. As you can see from the chart, Gold Road has significantly outperformed the market as a result of the takeover offer, and the share price has also been more resilient than the ASX 200 Gold Index, which has declined in recent weeks, and despite the relative under-market performance of Northern Star. From the perspective, of course, of Gold Road shareholders, our price is now closely correlated to Northern Star, with the value of really Gold Road's business now fixed as a consequence of the takeover proposal. Accordingly, my presentation today really doesn't focus on operational performance and short-term outlook, like you'd see from most producing companies. The production and costs, of course, in the first half of the year have been somewhat disappointing, and guidance is currently tracking towards the bottom end of production and the top end of cost. And perhaps it's another reason for why the interests of Gold Road shareholders are best interested by accepting into the scheme. While my slides do not focus on the current operational issues for Gruyere, as I've outlined, I would like to cover a bit of history as to how Gold Road has created value and what the future long-term value of Gruyere is, both to Goldfields and of course to the wider community. So just tracking through a bit of the history and value creation achieved by Gold Road with some key milestones summarised on this slide. Gold Road, of course, has made one of what I would rank the best 3 greenfields gold discoveries in Australia in the last 25 years with the discovery of Gruyere. The other 2 being, of course, Hemi and Tropicana. And by greenfields, I mean where there was nothing there before, no headframe, no previous mining activity, and those are, of course, the kind of harder discoveries to make, but also the higher value discoveries that have been made during that period. The Gruyere discovery and the rapid progress made resulted in the maiden resource being declared in 2014, and very much a defining milestone for the company. The formation of the Gruyere joint venture was very widely recognised across the industry as being very innovative and a lower risk approach to a major project development. And that of recognition, of course, include Diggers and Dealers, who recognised Gold Road in 2017 as the Dealer of the Year. Diggers and Dealers, of course, also had the foresight to award Gold Road the Best Emerging Company in 2011, and that was well prior to the discovery of Gruyere. Gold Road recognised the value of the Hemi discovery at a very early stage. Gold Road, in fact, was both a very early investor in De Grey and had conversations with De Grey management in early 2020, immediately after the very first discovery holes were placed into that deposit. Unfortunately, the proposal we made to the board and management at that time didn't progress, but it did ultimately lead to a conversation with DGO Gold and ultimately the $300 million transaction that we did with DGO Gold to acquire the initial 14.5% interest into De Grey. And then, of course, through a subsequent on-market purchases and using some quite sophisticated derivative structures and participating in various equity raises, we increased our position to 19.9%. which we thought, of course, gave us a pretty strong position to be in, what I would rank as probably the best discovery in WA in the last 25 years. However, unfortunately, you really look at it, the size and scale of Hemi and the market cap of De Grey was fundamentally too big and too good and got beyond us. If it had been anything less than that, then the future, I think, or the position where Gold Road is today would have been quite different. However, we have, of course, created significant value for Gold Road shareholders with where we have landed with our total investments into De Grey around about 400 million, and we're sitting on at least a double of that value if you look through a sort of see-through value of that shareholding. So the value creation by Gold Road has largely become as a result of new mine exploration, both through the discovery of Gruyere, obviously some of our other deposits in the Yamana Belt, and of course through the exposure we've had into De Grey and the Hemi ore body. It's really quite a different story in terms of value creation from most of the presentations you'd have heard from other producers in the audience and even some of the presentations in this session. But there have also, of course, been some fantastic success stories in the M&A space through the likes of Northern Star, Evolution, and I'd call out Ramelius. However, there's been a lot of M&A that's resulted in larger market capitalisations, but with very little share price capital growth, creating value for shareholders. Of course, the best way to kind of look at the share price or the value creation over time is through simply a share price chart, which is a chart that we actually prepared back in May for our AGM, and it's really just a 10-year window, and it increases the growth in value that long-term shareholders in Gold Road have enjoyed, and including some of the same milestones that the company has gone through over that period. The chart here starts at 43 cents 10 years ago and actually ends at $3.24, which is where it was on the date of our AGM and is almost exactly where it is at the moment. If you'd invested $1,000 back at that time, your investment would be now worth about $7,500. And if you'd wisely selected the option of our dividend reinvestment plan, your total holdings would be worth around about $7,700. And of course, we've had some pandemics and other speed bumps along the way, but the general trend of what you see here is, of course, what every investor wants to see in the portfolio is a chart that goes up. Clearly, we've massively outperformed both the ASX 200 index and the gold price, and that's despite many gold stocks underperforming the gold price, and lots of market commentators have been quite critical of returns from gold equity investments versus physical gold. Of course, the origins of Gold Road started well more than 10 years ago, and if you were astute enough, or perhaps lucky enough, to invest in Gold Road when there were 3 cents in 2013, so that's immediately prior to the Gruyere discovery, then congratulations, you've made more than 100 banger return. So to my friends that were out in the small tent out the back here, who've been struggling to gain investor interest into exploration, I hopefully provide you with some encouragement in highlighting the value that you can achieve through making a world-class discovery. My previous slides, of course, have provided a backward-looking lens on value creation, and shareholders are, of course, forward-looking, as are Goldfields in their motivations for acquiring Gold Road. So my next couple of slides focus on the future value, which may, of course, benefit Goldfields as well as the wider community, including the Yilk people who are the native title holders at Gruyere and Yamana. The successful exploration by Gold Road has delivered around about 500,000 ounces in the Yamana Belt, with the largest and highest value of those resources identified being at date at Gilmore. In January, Gold Road announced a very positive pre-feasibility study and maiden ore reserve for Gilmore, which clearly demonstrates the value created from our sustained exploration efforts at Yamana. The details of that study outcome are outlined on this slide, and were completed with what is quite a conservative gold price versus today's price of course, around about $5,200 an ounce. The rigs are still turning at Gilmore. We're in the midst of about a 30,000 kilometre or $10 million drill program, which aims to upgrade the inferred resources and continue to grow the resource at depth, including a testing of 100 to 150,000 ounce exploration target, the details of which were released to the ASX back in mid-April. Of course, the ounces we've discovered to date at Yamana we would see as really offering incremental value. And like many mines in the goldfields, the best exploration target is often just sitting under the mine that you have, and that's really the way that Gold Road sees the underground mining opportunity at Gruyere. And of course, Gruyere is a relatively low-grade deposit, 1.3 gram reserve grade, and that tends to get the instinctive reaction of that won't work as an underground, and I've heard that lots of times. And while I'd say that is generally true, what it doesn't recognise is the unique scale and continuity and geometry of the Gruyere ore body. Gruyere is unique, and it's approximately 2 kilometres long, up to 140 metres wide, and is likely of kilometres in vertical extent. The ore body has an endowment of around about 10,000 ounces per vertical metre, where it's been fully drilled. So if you like some simple maths of that, it's about 10 million ounces per kilometre extent. And there aren't too many deposits with that kind of scale of endowment. The unique scale and geometry provides the option to consider high tonnage, low cost, bulk underground mining methods such as sublevel caving. Now there clearly are other mining methods that need to be considered, or perhaps combinations of mining methods, and that should be part of the work done in future studies. Now, Gold Road has been reporting an underground resource at Gruyere since 2020, and that was based on some early conceptual studies that we did to support the reporting of those resources. And of course, under the JORC code, we have to meet the criteria of reasonable potential of eventual economic extraction. So we've done a kind of high-level scoping study to be able to support that. And I would remind you that, of course, the gold price back in 2020 was a mere $2,000 per ounce. And of course, while costs have gone up, it should give you some insight into how we see the potential operating costs and therefore margins from the underground at Gruyere. Now, with considerable persistence, Gold Road has persuaded Goldfields to consider the underground mining opportunity at Gruyere, with a conceptual study completed by SRK for the joint venture and provided to Gold Road in final form in April, of course in the middle of the takeover proposal for the company. The SRK study demonstrated that bulk scale mining via sublevel cave, coupled with the right capital investment on haulage and other infrastructure, means that an underground mine is likely viable. In fact, the results were more than just viable, they were much better than Gold Road anticipated, and at a conservative long-term gold price assumption, and potentially quite spectacular at current gold prices and costs. The SRK study is based on both the inferred resources that have been drilled off to date below the pit, as illustrated on the side, and the assumption or an exploration target, if you like, that the ore body will continue at depth. And as part of that study, a block model was constructed both the inferred and that exploration target, with a comprehensive mining study completed. So there has been a significant level of rigour and analysis on mining methods on costs, of course, made upon that made-up exploration target. So the next logical step here is, of course, to drill out the deposit, and there are 5 rigs doing that, with about a $26 million program for this year in progress, and that will continue into next year. And the results, as I would see them, are pretty unsurprising and in line with the expectation. The opportunity to extend the life of Gruyere is for many years beyond the current open pit life, which extends to 2032. We, of course, wish Goldfields success in realising the opportunity created by Gold Road and the benefits that can flow to the service providers and the communities of the Goldfields and, of course, the Yilka native title holders. As I explained to Yilka in a recent community meetings, where you kind of need to put things in simple terms, I think you should think of the benefits continuing to support your community, your children and your grandchildren, and I mean the ones that aren't born yet. So with the journey of Gold Road likely coming to an end, the board and management of Gold Road has clearly created value for shareholders to date, and the wealth will likely continue for generations to come. We're of course very proud of that. While the transaction is a great deal for shareholders, people of course are often forgotten in these circumstances. So while I've received many congratulations very widely, on a great deal, I also remind people that it's commiserations for many of our staff. We continue to be, it is yet to be determined, I guess, as to who in our team may transfer to Goldfields, but of course many Gold Road employees don't have great expectations of continuing employment. Most of our employees, of course, are quite realistic and understand that takeovers are just part of business, and of course many of us have been through multiple transactions, so it's of course just a fact of life. What I do know is we've built a great team at Gold Road, and it's rare to have a group of people that work hard, create value, and enjoy doing it together. And it certainly hasn't always been that way within Gold Road. I've personally found it quite humbling to be told by many individuals that they would like to both continue working together and with me. I'm sure that you'll see many Gold Road people progress to be industry leaders in their future roles, and I'm personally committed to working with them to find the right opportunities, either together or helping them make their next steps. And there's a high degree of mutual loyalty behind that statement. Thank you, and that concludes my presentation. I'm, of course, happy to take a couple of questions.